Hey everybody, Todd at 51% Crew again. I've been doing a series of videos the last couple days, obviously, if you've been watching and following me, about candlesticks and how to read them and what kind of indicators they can give us to give us an advantage in the market and give us an idea of what's going on and how we can trade them and effectively make a rational decision and add that to our arsenal for our trading. And they basically tell you a story. And I was looking at the Ethereum chart, and I was trading it the other day, or it was yesterday or the day before, and it didn't really occur to me because after so many years of trading, I just kind of like fall into this routine. I see things, I'm like, okay, I sell my trade. I noticed one of the largest complaints I see with traders, especially new traders, is they can try to find the bottoms, and most of the time they get lucky, or they can get lucky, but they don't know when to sell off a position. So I want to show you an example of a clear indicator to sell a position and why. And then we're going to go over the Doji candle. So basically a Doji candle, it is used as an indicator of a trend reversal, whether it's at the top of a trend or a bottom of the trend. It usually tells us a market is going to reverse. You're going to see them all over the chart, but the indicator is stronger for the longer the time frame. For example, a 4-hour or a 1-day doji will be a much stronger buy or sell signal than obviously a 5-minute or a 15-minute or a 30-minute. So there's 4 types of dojis really. So what it is let's draw one here. This is a traditional neutral doji when it's a complete cross like this. That is a neutral doji. Then we have another type of doji that's called a long-legged doji when you see it like this. So that would be our second type of doji. Our third type of doji is called a Gravestone Doji. So this would be a Gravestone Doji, and this shows a lot of sell pressure from the top. The next type of doji is this. It is a Dragonfly Doji when it's a complete, almost to T. Let me move this down for you. This could be like exactly like this, and that's a Dragonfly Doji. That's telling me that there's a lot of buying pressure, and that's a good signal at the bottom of a trend. The trend's going to reverse. So this is something you can watch for in the candlestick patterns. This could even be considered a dragonfly or something like this. It doesn't have to be exactly at the top, but I would say in the top 3/4 is a general rule to use. Some people will argue that, but basically the doji pattern is an extremely old trading method, and it was applied to rice and stocks and FX markets. And the reason I say we have to be adaptive in crypto, and we have to kind of change the rules but follow the rules, if that makes any sense. And the reason for this is crypto is one of the most fast-paced, most violent markets there are. So we have to be a little bit adaptive, and we're on a new horizon here, so we kind of have to change. So that's why I say traditionally a Dragonfly Doji would look like this. But in a crypto market, if it's anywhere in the top 3/4 of this, I would consider this still a dragonfly. That would be a dragonfly to me. Just for the simple fact is the violence of the market. So let's get to the point of this video and erase this now that I explained the Dragonfly Doji and the neutral and the Gravestone and the long leg doji. So there's a very clear sell indicator on this chart, and that is right here. We're seeing 3 dojis in a row. And let's go over what happened in this market, because remember, this is on a 4-hour chart. So this is a course of 4, 8, 12, 16 hours. This gave us an indicator that this market is failing and we need to sell our position. So hypothetically, let's say we bought here and the market came up. So cool, we're in a great position, made some money, we're in a profit. What are we seeing here? This candle pattern right here is a bullish engulfing pattern. This green candle engulfed the previous candle of a spinning top. This is a spinning top, bullish engulfing. So that was a good signal. The next candle we move over to on a 4-hour is an inverted hammer. So an inverted hammer can be either a bullish or a bearish candle. It depends where it happens in the trend. If this inverted hammer happened at the bottom of this trend down here, then that would be considered a bullish signal. Since it happened at the top of a trend going up, this is considered a bearish signal. The reason why is this is showing sell pressure down on this trend moving upwards, if that makes sense. But if this was at the bottom down here, that would tell me that the bulls are starting to fight back, but the sell pressure is still continuing and pushing it rejected, but they're starting to fight back. So this hammer that's inverted could be conceived as a bullish or a bearish signal candle. So since it's happening on a move up, I'm considering this bearish at this point. Then we have a long leg doji. So technically this is a bearish candle. Now we're signaling a reversal candle, and what that is that the second candle is our confirmation candle. So we're confirming that we have a bearish signal, if that makes sense. So a bearish candle, now a reversal candle. What happened? The price dipped down after this. It came all the way down to this point and broke through this Fibonacci level after we seen two bearish signal, a bearish signal, a confirmation of a bearish signal, and then we seen the dip. What happened was they pushed this back up, and this is a Dragonfly Doji. Okay, so now this is a neutral signal after two bearish signals. So we got a neutral signal because that canceled out these. So then our third candle is another doji. So therefore this candle right here is the point where you want to sell this market. This market is going to fail about 80 to 90% of the time. 3 dojis in a row, you need to start getting out of your position. This all signaled bearish. And look what happened. It made a drop. So this goes back to our hammer candles. See how we have a hammer? A hammer can be at the top or the bottom. I forgot to cover that. But there's a hammer candle at the bottom of a trend. That's showing bullish. Inverted hammer, bullish signal. See how this works? Inverted hammer, top of a trend, bearish signal. Now we're looking at a bullish engulfing pattern of this inverted hammer. So this could be considered a bullish signal, but we need to wait for a confirmation candle on this. So I just wanted to cover some ways that you can take and apply these to your trading. And a lot of people say they don't know when to exit a market, but this is clearly a signal to exit and a beautiful example of it. And I wanted to cover that. It looks like I'm coming up on 9 minutes for this video. So I'm going to cut this one off, and next time I see a good example of something in the market, I guess I'll throw a video up of it. And hopefully this helps you guys make some decisions and get you some better ideas for what your trading can do. Oh, shit.